Hey guys, today we're going to go over my Roth IRA $100 to $100,000 account challenge. You can see we are up as of yesterday 2,725%, and as of today, when you combine the 4.41% to that, it ends up being 2,850% total gains on this account. Guys, make sure, check the links in the description, my Robinhood and my Webull affiliate links, genuinely, they earn you guys $5 each, up to $1,000 each, just for signing up, and I think depositing like $20. Anyway, so this is actually disappointing. I would have doubled this account today, genuinely doubled it, but Roths are cash accounts, so you can't trade on unsettled funds, and I was unable to buy the Bath & Body Works calls, which I meant to. I was able to on my meme account. You can see I earned the 25% on them today, which from buying them on last Friday when I wanted to, would have genuinely been 100% total return. Whatever, at least I got some on this account, but a little disappointing. And I guess we'll take 4%. It's not the end of the world, but yeah, a little disappointing. This would be $6,000 right now, and it would be a 6,000% total return. What can you do? Anyway, going over my main accounts, my $200,000 of United Healthcare. This is going to be how, by the end of 2029, be earning $21,000 of dividends. And so this is our stock price appreciation, how I calculated future stock prices. This is a 5% cumulative total share reduction by 2029. I'm expecting UNH to return to a 4.5% margin, 535 billion revenue, very modest 14p. So these are very conservative. And I see a 4.6% annual return to get to that. If you're extrapolating that out as 2029, and then you do your inverse, and it ends up being that. So basically, at the end of Q4 2026, I'm going to start adding 3K a month because I will have graduated. I'll have my career job by then, which is 156,000. So 156K of this is just deposits. So only 200K of growth by then, which that's not only. This is also total account value change, including this. So it's actually only a 20% annual return, which is still amazing. This is if everything goes right. But anyway, this is basically done by selling covered calls, selling puts, and then reinvesting everything. This ends up being a yield of 13% off of just options if everything goes the way that I predict, which you can never predict the future, so we'll see what actually happens. Then adding in our deposits and reinvesting our dividends, which you can see this is our quarterly dividends based on the old shares, and you can see everything compounds exponentially, and we end up with 1,500 shares by the end of Q4 2029, which is $20,000 total a year. You can see that this is largely doesn't get affected that much by the stock price change. You can see if the stock stays flat, still 20K. Stock goes down 10% a year, still 20K. Stock goes up. I don't know why I put a plus. Stock goes up 22%, whatever, still 19K. The stock goes up 40% a year. Now it's going down a lot because if the stock's that expensive, you can't buy as many shares going forward. Like if the stock is $800 a share instead of $400, I can only buy half as many. So you end with way less shares, and then the dividend yield's a lot lower. But the stock is, UNH is not ending at $1,200 a share. It just isn't not going to happen. So this is more realistic growth because this does include dividends and then buybacks, and so it ends up being more like an 8% annual return without options, which is what I expect UNH to return very, very conservatively to shareholders right now. So yeah, pretty crazy. Ends us with conservatively, this assumes all of this works out correctly, 566K by Q4 2029. So we'll see how everything goes in real life. And if I can't add money, then it's 400K by 2029, and dividend income is down, but it's still 15K a year, so I'm not gonna complain about that. Anyway, thanks for watching. I hope that this was interesting in the very least. You can see how covered calls really add a lot of leverage to your account. You can see I only have 192K of capital, but I have 326 times 713. I have like $230,000 in shares, because when you sell calls, you earn the equity from them right away, which you can then buy more shares with, yada yada. Works out pretty cool. And it doesn't really add any risk when you're doing that. The risk is of potential capped rewards, not of downside risk. It's of potential loss of upside, which, again, my upside cap is about 40%. After 40%, if it's like 42%, now I'm losing money on the option. So the covered calls cap out losing me money at 40%, but only barely. Like, that's the break even on them. So it really isn't the end of the world if the stock goes up. I mean, even if it went up like 60%, not 60, 60%, this would lose 50K. So then, you know, that's not ideal. And the end of year return would actually be almost actually exactly identical. Yeah, pretty much exactly identical. So you can see that the return, if the stock goes up that much, that's our capped return of that. But I would be very happy with that. Anyway, I hope that was informative for some of you guys. Again, you can start investing with any amount of money, as I've shown here. Of course, this is very lucky, but you know, I do this another 2 times, $100. I've 30x'd it already. 30x again is 90K, right? So, and then I do that again, and that's $1 million, or $3 million actually. I don't expect that to ever happen, but you know, theoretically it's possible, I guess. Anyway, thanks for watching. Hope you guys enjoyed this video, and peace. Use my referral links in the description.